The Yen-USD Exchange Rate, a historical journey. The Japanese yen, symbolized as yen, has a rich history dating back to the Meiji Restoration in the late 19th century. Introduced in 1871, the yen replaced the previous feudal currency system. Its name, yen, translates to round object or circle, signifying the circular coins that were minted. The Bretton Woods system. After World War II, the Bretton Woods Agreement established fixed exchange rates between major currencies, including the yen and the USD. Under this system, the yen was pegged at 360 yen per USD. This arrangement facilitated international trade and economic stability. The floating exchange rate era. In 1971, President Richard Nixon abandoned the gold standard, leading to the collapse of the Bretton Woods system. The yen transitioned to a floating exchange rate regime, fluctuating based on market forces. Since then, the Yen-USD exchange rate has been influenced by economic events, monetary policies, and geopolitical developments. Key events and milestones. 1985 Plaza Accord. Major economies, including Japan and the US, agreed to depreciate the dollar against the yen to address trade imbalances. The yen strengthened significantly during this period. 1990s bubble economy. The yen reached historic highs against the USD, impacting Japan's export competitiveness. 1995 Kobe earthquake. The yen weakened due to reconstruction efforts and capital outflows. 2008 global financial crisis. The yen appreciated as a safe haven currency during the crisis. 2011 Tohoku earthquake and tsunami. The yen surged again as investors sought safety. Abenomics. Prime Minister Shinzo Abe's economic policies aim to weaken the yen to boost exports. COVID-19 pandemic. The yen remained relatively stable during the pandemic, reflecting its safe haven status. The carry trade phenomenon. During the late 20th century and early 21st century, the yen became a popular currency for the carry trade. Investors borrowed yen at low interest rates and invested in higher-yielding assets elsewhere. This practice led to a consistent weakening of the yen against major currencies, including the USD. Trade surpluses and deficits. Japan's persistent trade surpluses historically supported the yen. As Japan exported more than it imported, demand for yen increased. However, in recent years, trade dynamics have shifted, impacting the yen's value. The future of the yen. As we look ahead, several factors will continue to shape the yen's trajectory. Economic recovery, Japan's post-pandemic recovery and fiscal stimulus measures. Global monetary policies, the U.S. Federal Reserve's actions and interest rate differentials. Trade relations, Japan's trade dynamics with major partners. Safe haven status, the yen's role as a safe haven currency during crises. The yen-USD exchange rate remains a dynamic interplay of economic forces, historical events, and geopolitical shifts. Its resilience and adaptability make it a captivating currency to observe and analyze.